Can we start?
Start now.
Yeah, we'll start now.
Yes. السلام عليكم، مساء الخير ضيوفنا الكرام. نرحب بكم في لقائنا في النصف الأول، تقرير النصف الأول للعام الحالي، ومعكم من شركة الجزيرة الرئيس التنفيذي مستر فينكت، الرئيس المالي مستر بيجوي، ومحدثكم يوسف الكمالي رئيس الإدارة والموارد البشرية. Welcome our guest to the half of the year for negotiate. Welcome for all to Al Jazeera. And we have Mr. Vinket, the CEO of the company, and Mr. Bijoy, he is the chief of the finance, and myself, Yusuf Al-Kamali, chief of the HR and administration. And now I will leave with you, Mr. Vinket. He will, the CEO, he will speak with you. Please, Mr. Vinket.
Assalamu alaikum and good afternoon to all of you, ladies and gentlemen. I think we'll go through a quick presentation. Most of you are familiar with the company, but still we will say something about the company as what it does, and then we'll go ahead with the results of the first half of the year. Okay, Bijoy, if you can kindly.
Sure, sir. Just a minute.
Yeah. Is there a problem?
So, yeah, no. Can you see it right now?
No, we can only see the screen. We're not able to see the presentation.
1 minute, sir. 1 minute. Just 1 minute.
We're able to see the screen, but not the presentation.
Yeah, 1 minute. Just 1 second.
You want me to open it, Bijoy, on my computer?
Just 1 second. I'm just again opening it. Can you see the presentation now?
Yes, Vijay. Make it
full.
Yes, we can, yes.
Yeah, I'm making it full.
Yeah. Can you put slide view or?
Yes, sir, I'm doing it.
Bandwidth is low, so let us just switch off our videos. Yeah, you can switch off your video, Bijoy, when your bandwidth will improve.
1 second. Yeah, sorry.
Okay, please go ahead next.
Yeah. So,
Okay, for somebody who's new about the company, Jazeera as a company was established in 1996, formerly known as Al Jazeera Tube Mills Company SAOG. Now it's known as Al Jazeera Steel Products Company SAOG. It's an Oman-based manufacturer of steel products. We operate two main business divisions, namely the tube mill and the merchant bar. We manufacture and market various types of steel products, including black pipes, galvanized pipes, hollow sections, merchant bars, merchant bar mill products, and rebars. Our products have diverse application in construction, scaffolding, irrigation, agriculture, engineering, public health, fencing, steam, gas facilities, firefighting, water and sanitation pipes. We use it for various engineering applications also. Can you go to the next slide, please? Our tube mill facility has 4 tube mills or pipe mills, as we call it, with a capacity of 300,000 tons. The merchant bar mill has a production capacity of 300,000 tons per annum and produces various steel products such as channels, angles, flats, squares, rounds, and rebars. Apart from Oman, Al Jazeera's key markets include UAE, Saudi Arabia, and North America. Both the manufacturing facilities are based close to Sohar Port, providing a competitive advantage in terms of logistics and access to key markets. Okay, next one. About the company, the parent company has the following subsidiaries. The parent company holds 100% shares in Al Jazeera Oman Steel Products Company Limited, limited liability company registered in Kingdom of Saudi Arabia. The principal activities of the subsidiary are import and sale of steel products manufactured by the parent company. The parent company acquired 50% shareholding in the subsidiary on 15 August 2015 and acquired the remaining 49% on 31st March 2017. Al Jazeera Steel Products Company LLC UAE, the parent company holds 80% shares in Al Jazeera Steel Products Company LLC, a limited liability company registered in UAE. Subsidiary company is setting up a 450,000 metric ton per annum state-of-the-art medium section mill in Khalifa Economic Zone, Abu Dhabi. The subsidiary was incorporated on 4th October 2022. Next slide, please. In terms of highlights, I think the first half of the year was a Vijay, if you could mute your mic, please. Yeah. The first half of the year was a good year for us, a good part of the year. We saw margin improvement in the key domestic markets. This was achieved by optimizing the product mix and intelligent market selection. We also, as we had our normal performances, we are also preparing for the future, where we have upgraded our key facilities during the current period, which is the tube mill and the merchant bar mill. We have made upgrades wherein we will be ready to produce pipes for oil and gas by the end of the year. Of course, limited sizes, but still something for the oil and gas sector. And we are also we are adding additional sizes to our merchant bar range by these upgrades. We increased our sales of merchant bar products in Oman during H1. In terms of awards, company received Almara Excellence Award under the category of development and innovation, especially towards the social sector, in terms of what we do in terms of employment and what good we do to the society. For the first time, Jazeera participated in Europe in an exhibition, participated in the Tube and Wirefire exhibition in Düsseldorf, Germany, and Big Five Construct in Saudi. Saudi, we keep taking part regularly, but Düsseldorf was the first time. Can you go to the next slide, please? In terms of snapshot, our revenue for H1 FY24 was 1% down as compared to 23, but this is more due to the price effect. Prices as such of steel products were lower than last year. However, our EBIT improved by almost as much as 27%, taking our EBIT to 3.821 million Omani Riyal as against 3.002 Omani Riyal in 2023. Our PAT, profit after tax, improved by 32% from 1.907 million to 2.519 million in FY24. ROA increased to 5.1% on an annualized rate, and net profit stood at 3.6 versus 2.7%. I have to tell you that this performance might look incremental over the last year, but please take into account the global macroeconomic scenario. Please take into account the geopolitical issues, the logistics issues which the world is facing right now. And look at the interest rate regimes as compared to last year versus this year, working capital issues in the market. I think it's a fantastic performance for a commodity steelmaking company that we have not only incrementally improved, but PAT has improved by as much as 32% over last year. So, in my view, with all these years of service, I think it's a very good, nice performance. At the same time, we have funded all the upgrades in the plant through internal accruals. Okay. Vijay, can you go into the details, please? The next two slides and details, handle it, please.
Sir, sure, sir.
For
So
those
good afternoon to
Mr. Vijay is our CFO. Okay. Vijay, please go ahead.
yes. Good afternoon to everyone. I'm just going into the detail of what CEO has just explained in slightly in detail. The quantity I'm just giving this last 6 months and this current 6 months. Last year in 2023, we did 227,590 of tonnages, and against that, to this year, current period, we are done 222,968, a slight reduction of around 2%. Revenue from 70 million to 69 million, a reduction of almost 1%, which is attributable to both the quantity and the sale price and the raw material price. Similarly, you can see a reduction of 3% in the cost of sales. When our revenue reduced only 1%, the cost of sales reduced to 3%, which you all know that okay, we are able to smartly negotiate the raw material prices at a better rate. And the gross profit, there is an increase of 5% from 9.3 million to 9.8 million, an increase of $500,000 riyals. Other income, which is a small one. Selling and distribution, again, a major line item. Almost like around compared to the previous period, there is a saving of 11%, which is 468,000. You know, last year in 2023, the freight rates were on the, I'm talking about the freight rate in the sense actually for the exports for the US market. It was on the very high side, and this year we are able to manage it on the lower side. Again, it is going up. Due to a lot of geopolitical issues, we are not able to the Red Sea issues, which CEO has already explained. But still, we hope that we will be able to get at the current rate going forward, even though there will be a slight escalation in the Q3 and Q4. The general and administrative expenses, there's a general increase of around 8% is there compared to the previous period. Other operating expenses, which is a small line item. The EBITDA has increased by 27% from 3 million to 3.8 million, an increase of 800,000 riyals. Interest expenses increased by 12%. Again, I would like to highlight here, on an average, the interest is in the range of around 7.5% to 8% is the current market. Still, we are able to get it around 6%. Even though there is an increase in interest rate by around 40% when compared to the previous corresponding period, our increase is only 12%. Then again, net profit, we are able to increase it by 32% from 1.9 million to 2.5 million riyals. Any queries in this slide? Or otherwise, I will go to the next slide. I'm going to take you to the major ratios, the number of days. Inventory turnover days, which increased from 88 to 99 days, because we need to have at that point of time slightly on the inventory on the higher side. Debtors turnover days reduced from 98 to 84 days. Creditors turnover days also improved from 17 days to 25 days. Overall operating cycle in days improved from 169 days to 158, an improvement of almost like 11 days. Then return on asset, everything we already just explained, from 3.8 to 5.1%. Net profit ratio on sales increased from 2.7 to 3.6%. Any queries, anything further want to discuss? Most welcome.
I request here also, who's any question, anything, I request for name and from. This is only for our respect, save or record.
Yes, Nitika Gupta, there is a query from your side, right?
Yes. Hi.
Yeah.
Thank you, team. Thanks for taking my question. This is Neetika Gupta from Mubar Capital. So my first question is on the current capacity utilization. So our calculations lead us to believe that it has dropped in 2Q24 compared to 1Q24, the back calculation that we have done. So could you just explain, the reasons behind it, and do you see improvement in the utilization rate in the near term, and what sort of expectations do you have for the year end and in the next 1 year?
You
Sir.
mean in terms of the sales volume, and therefore you're calculating it?
Yes.
Yeah, that's part of the 2,000-ton drop. It's mainly on account of certain shutdowns we had to take in terms of putting up new facilities for upgrading the facilities. So there was a spillover between June and July. We had a shutdown of the merchant bar mill. So you're seeing a small drop. It's not a question of capacity utilization, but it is a planned shutdown both for upgrade and for maintenance. So utilization rates will remain the same as what we were doing before. In fact, these upgrades are meant to deliver higher volumes in the future.
Sure. So basically, then we can expect the utilization to stay at the current rate. It's just that there won't be any planned shutdowns, or are there any scheduled planned?
Provided the market helps us.
Yes. So I was just leading to that. What are you seeing on the market front, and how are you seeing any, improvement in the near term, or is it still some way out there? So that was the next part of the question, please.
An investor's call. Otherwise, I would have turned the question back to you to ask you how the market is. Yeah, but unfortunately, I don't have that luxury. But the situation is, the second half, we will have to wait and watch, because there are challenges in. I don't want to sound negative. Jazeera has always managed difficult landscapes, but there are challenges in terms of geopolitical issues, freighting around the globe, and issues with the Chinese market in terms of commodity prices. So this is going to be a guiding concern for the second half. But at the same time, I think as Jazeera, we are very well placed to manage these sort of ups and downs because of our experience. We hope to maintain the same utilization, if not more.
All right. Okay, quite encouraging. And then, you have increased your export volumes and tapped in new markets such as North America. So, are there more markets that you're looking at that you could tap into? For example, in 2023, I think 30% of the revenues came from non-GCC countries. So, are you looking to develop that export ex-GCC front? And are you seeing any more demand there?
America, is something which we keep doing. The other markets is what we are trying to improve, like Southeast Asia, even markets like North Africa is where we are trying to improve our volumes. To be honest with you, North America is something which we don't want to increase our volume because there are certain, tariff-related issues. So we want to maintain our presence to a certain extent, but look at other markets mainly.
All right. And then just one last one. So this new factory in Abu Dhabi. So can you just, I think it's planning for a commission in next year. So can you just give us some more details about the new facility, if it's on target, and what will be the target market for this facility? So are you planning to address UAE market through this facility, or how is it like? Just wanting to understand this on a bit.
First of all, the facility in Abu Dhabi is a logical extension of our merchant bar mill. Merchant bar mill produces merchant sections. The facility in Abu Dhabi will produce what is called medium sections. Okay. And this market, it is not only UAE, it is for UAE, the larger GCC, and as against merchant bars. The medium sections is a commodity, is a product which is more export friendly and more project friendly, meaning these are materials which go directly into structural projects. So that's the idea of putting this facility. It's a state-of-the-art facility. It has a capacity of around 450,000 tons per annum. So it is being put up with the technology supplier is Mrs. Pomini from Italy. It is being put up in Kizad, the Khalifa Economic Zone, Abu Dhabi. That's what it is. So UAE will be a market, and the other GCC country also will be a market, and other export markets. And not only that, that mill is also theoretically capable of rolling rails in the future. Okay. Though we have not put the specific facilities for heat treatment and all for rails, that will come in phase 2 of the project.
All right. Thank you. Thanks a lot. And congratulations on the great set of results despite the tough macros. Thank you so much.
Hi, good afternoon, sir. I think, can I take a couple of questions from your end?
Sir, I was waiting after a long time, so
Yeah, no. I think I've been a bit not covering the stock quite closely now. I think just want to understand your latest the upgrade which you have done in the merchant bar mill. You mentioned that the major upgrade has been successfully completed. Can you elaborate us what could be the kind of impact which could be seen in the coming period? That's my first question. And on the second question, I know you're the steel veteran. I think we are also watching the iron ore prices and the steel prices, especially in Chinese market. And do you think what could be the impact for the mill producers like you in the region? And also, do you see the demand in the region is really helping out in terms of mitigating this? How do you see your outlook for the steel market as such? I think these are my couple of questions to start.
to be honest with you, our merchant bar mill is a commodity product. It's on the lower end of the commodity segment of merchants, as we call it. That's why it's called a merchant bar mill. It's sold by merchants. It's not sold to projects or stuff like that. So one of the reasons for the upgrade was to mitigate being in the commodities, out and out in the commodity segment. Therefore, this upgrade will help us produce small structural sections, not medium or large, but small structural sections, which will help us weather a little bit of this commodity cycle, not exactly fully, but weather a little bit of this commodity cycle. And if the market supports, our volume theoretically should increase. But if the market is going to be, as the signs are showing in terms of the Chinese economy, at least it will help us maintain volumes, if not reduce. See, all this we are doing is to diversify our portfolio of products which go into the market so that the sales team has better control of how they are able to take the material across to the product, offer a wider basket of products to our customers locally so that it desists them from importing material even if the price is much lower, because they get a one-stop shop, they get faster deliveries for everything. That's the idea of these upgrades in the market. Your second question was what, Sundar? I missed out in this.
I just want to understand on your the Chinese market overall, and also your key sources of raw material.
That is an concern, Sundar. Honestly, it's not only for us. For every other product going into the market, right from copper to everything, I think there is a general, slowing down in China, which cannot be looked aside. We have to take account into that. But the only silver lining, if I may say, is if their prices come down, their raw material for us, like hot rolled coils, billets, and other things, also come down. So being a re-rolling mill, as long as we are able to manage the supply chain reasonably well, we'll be able to ride the storm. But the only problem is when you have continuous fall in prices, buyers tend to hold back buying, and then the whole buying cycle slows down. So that will pan out in the next 2 to 3 months. But I think as a company, we are more or less, well positioned to handle this. We are not excess on inventory. We have been monitoring the inventory very carefully. But challenges are there as usual. Every year there are such challenges, so we manage them.
Okay. And the last thing from my end, since you pointed out to the inventory side,
Sundar, sorry to interrupt you. If
yeah.
the Fed cuts interest rate in the beginning of September, as we are hearing, it should give an
Mhm.
overall fillip to the market.
It's more like the market is building up for this. I think today also the data is coming. I think market is building up for this. Hopefully, I think Fed is more of a following the market.
So I would want your view whether that would really happen. If that happens, there will be some positive sentiment in the market.
I believe, I think the data shows more in line with the cut which is going to come, and market is already pricing it for it, and we need to see that. I think eventually we are on that, and the market
Basis
consensus
points or
view.
50 basis points.
Yeah, yeah, that's the challenge. Yeah, true.
Okay,
And
go ahead.
one last thing from my end, which are the key raw material sources from your end? Are you buying from Iran and other countries where you are able to source it? Because you always have a good sourcing capability. Because if you look at the H1 performance, also your gross profit
Iran is
has
out of the
improved.
radar, Sundar.
Which
Iran is
one?
out of the radar. We are sanctioned, so we can't buy from them.
You can't buy again? Yeah.
Yeah, we can't
Okay.
buy.
Then
The
more.
options are mainly China, India, Saudi, okay, and but now even sometimes Australia comes in for hot roll, okay.
Mhm.
Any other origin, sometimes Brazil comes in into the mix, Korea for, the API and other things. So that's what
Mhm.
it is. But the good news I can tell you, because it does not come out very clearly in the presentation, is as a company, we have modified mill number 4 of our tube mill to produce API pipes, which is the oil and gas related pipes. The main target is PDO, our domestic market. We are we are having a certification, API certification audit by the end of August. Hopefully, will sail through that. Then by September, we will be an acknowledged producer of API pipes, which is oil and gas related pipes. And hopefully, in 3 or 4 or 5 months, we will be certified by PDO also. So that is the general line we are taking, rather than, because everywhere around the world, tariff barriers are being built. So
True.
with the help of our Omani colleagues and with our own internal technology upgrades, we want to be more at home in terms of, there is a good market with PDO, to be honest.
Yeah. Yeah.
More than the capacity of rolling which we have in terms of mill number 4. The other mills are not capable of handling that. Only mill number 4, which is a larger diameter mill. So that is an important focus area. More than the merchant bar upgrade, that is a key thing for the future. Yeah.
And this will be a completely new product mix, correct? Which will add value, and in terms of overall, the mix will change. Yeah, this is a new area you're talking about.
Absolutely new area for us. Absolutely new
Okay.
area.
Yeah, which is I think which will be a high margin. I could see, like, if you're talking about a PDO oil and gas, should be a margin accretive.
It costs more to produce cement. There are more rejections and all. We will see how much more, but I'll be more happy that see, at the end of the day, exporting to any other market is fraught with risks. Whatever product, because you depend on the economics of that particular market. Okay, forget tariffs and barriers. You depend on somebody else. So, if as the Omani market builds, we should look at we should be more inward oriented in certain ways. I'm not saying you should withdraw from being global. In fact, we are becoming more and more global. We are putting up another factory in UAE. We have a wonderful, stock and distribution facility in Saudi. So there are so many things happening. But at the same time, we need to maximize our in-ground presence. Yeah.
Yeah.
Yes, Mr. Bishan, you want to ask something?
Thank you for my. Thanks a lot.
Thank you.
All the best for you, sir. All the best.
Thank you. Thank you so much. Yes, Mr. Bishan. Can you switch on your mic? I mean, you are muted, I think, Mr. Bishan. Where did he go? I think he logged out by mistake.
Yes.
Hello?
He left the meeting.
Yeah, he left the meeting. I don't know what happened. He raised his hand and left the meeting. Maybe some Are there any other questions? Yes, please.
Hi,
Rahil?
good afternoon, team. Thank you, Mr. Venkat. I had a question with regards to the Hafid rail project that was announced in the first quarter of this year. Could you give us an update on what are the developments like currently going on?
We won't have too many details on the Hafid rail project. We are not following it as well as we should. We are following with the contractors for the Hafid project for supplies of our regular material. But in terms of rails and other requirement for that, we are not in the game as yet for Mr. Shahid. Okay.
Noted. Thank you. Thank you, Mr.
Yeah.
Venkat.
We will be in the game for rails maybe 3-4 years later, not now, from the UAE facility.
Noted. Thank you.
Thank you. Is there anything else? I see Pushpita Ramalingam, Bharti. Any other questions? Otherwise, should I say thank you for your attending the thing, and good afternoon to everybody. Anything else? Otherwise, we will take leave. Yusuf?
Yes.
Yes, sir. I think it's
Yeah.
we can
If
conclude
there
the
is no any other question,
On
yes, we
camera
can
as
leave.
a team. I think we can come on camera as a team and say thank you.
Yes.
Thank
Thank
you to
you.
our investors for having faith in us. I think your faith in us adds wind to our sails. We are trying to do our level best, and we hope to have your continued support.
Thank you.
Thank
you.
All
you,
the best.
gentlemen.
Thank you.
Thank you.
Thank you. Thank you. All the best.
Thank you.
Nice to
Thank you.
see you. Thank you.